Good morning. It's Wednesday, May 22nd, about 6 a.m. Central Time. Overnight, the precious metals are slightly weaker after yesterday's consolidating session. Interestingly enough, gold, silver, platinum, and copper could not extend their gains, while aluminum and palladium both rallied. Now, what could be happening here is we're defining a new trading range with 2450 as the new resistance point and 2400 as the new support level on the June contract. You'll want to remember, though, that the first notice date is May 31st, which is a shortened session. You'll want to be out of the market long before that. I would start focusing on August, October, and December if I was you here, and will come up with new support levels on all those different markets. You could basically bracket that $50 range onto those particular contract months. Now, today we'll see the news from the latest FOMC meeting. We'll get the minutes from that FOMC meeting and hear from Chicago Fed President Goolsbee. After the bell, we're going to get an earnings release from NVIDIA, Synopsys, and Snowflake. And for those of you that trade the S&P 500 and the NASDAQ, you'll want to buckle up, or you're going to sit back and watch if you do take your positions off or implement proper risk management strategies. Now, despite yesterday's metals consolidation, you could look at it as a glass half full or a glass half empty type of scenario. Yesterday's correction was shallow in nature, considering the higher volatility that we've been getting recently. Bargain hunters did step in, and they're focusing on long-term fundamentals. Now, copper continues to be the leader, with the global copper market expected to remain in a deficit due to lower production and also production cuts from Chinese smelters. I expect copper to register a more significant deficit in 2024 than was originally expected, and that theme will continue to worsen in 2025. So for some example of some ideas that I'll be looking at, I'll look at corrections as opportunities and focus on the micro contract for December and also March in 2025. Cyclical demand will continue to recover, and increased demand will continue to strain with the new green energy transition. So some domestic headlines that I saw yesterday. So I believe that as these domestic headlines continue to make waves, you're going to see more and more interest in some of these metallic metals, into silver and also into the copper market. Some of those headlines were a spring heat wave is expected to drive demand. The Texas power prices briefly soared to 1,600%. Here are the latest plans for Texas to connect to the East Coast electricity grid. So you could see that Texas, they've been strained for the last few years. They do need to upgrade their grid, but it seems like it's a little too late for them to just start diving into this right now. So we're going to see, as the strain on electrical grids continues, headlines will make me believe that longer dated copper positions would be advised. Now, overnight, you have some weakness in the copper market. We'll see how shallow this correction is. You got about a 10-11 cent sell-off right now, and the overnight weakness from copper comes from Chinese proposals to retaliate on imported vehicles by implementing a 25% tariff on cars with greater than 2.5 liter engines, and it's mostly your luxury vehicles. Remember, automotive demand does drive a lot of that copper demand. I used to look and see, how much copper was in a car back in the day, and I think it was something like 30 pounds, but don't even quote me on that. I don't even know anymore. So the S&P 500, we're going to have the FOMC minutes, which are released at 1 p.m., and a hawkish narrative could send prices back down to the initial support, 53.35, which is about where we're trading at right now. Deeper support's going to be 53.05 down to 52.95, and a possible melt up could occur, driving prices up to 53.75. Now, crude oil and natural gas, those two have also been getting headlines recently. The net long positioning in the crude oil market has decreased to the lowest level of this year. Often it's calm before the storm here. So people are out of that market. They tend to drove out in waves, and then they tend to re-enter all at once. So we'll see if there are any Middle East developments or if there are any continued drawdowns in oil inventories. Reuters polls indicates that oil stockpiles may see their third straight week of declines, with expectations of a 3.1 million barrel drawdown. Now, natural gas production continues to decline. However, I believe if you look at the chart, that temporarily we may be seeing a topping in place, and with a combination of rising production. Now, back to the silver market, the average true range is about 94 cents. So looking at the overnight session, it was about 60 cents, 60 times $10 per penny for that 1,000 ounce contracts is $600 range. You go to the larger one, it's $3,000 a range. The average true range is 94 cents. So if you go to that smaller contract, it's $940 and $4,700 on the large contract. So again, this all comes down to position sizing. So if you were trading the larger contract and this volatility had increased, you may consider doing something like 2 or 3 of the smaller contracts. This is just risk management, not specifically a recommendation. Now, your support level on the July silver contract is deeper. It's down at about 31.25, which is the May 17th close. We open the next section higher, so there's a small gap in the charts. Below that's going to be $30. Your resistance point is going to be 32.50, where a close above that could lead to a new leg higher. Now, when I map out all my support and resistance points, I use the daily chart because the daily chart appeals to my particular type of temperament and time frame on these tradings. Although I'm short-term in nature, I do look at things that are like 3 to 5 days out and then also can map out multi-months out. Other people use weekly, monthly, 60-minute, 5-minute charts. I even talk to some traders and 1 minute is way too long to be in the market. So if you have any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.